I don't see many people early in the morning at 9:30. Uh, I only would tell my learned friend Ajit Bhai that Ajit Bhai, as we go on, this hall will be full. Learned speaker Sri Ajit Bhai, past President Parimal Bhai, my convener Devendra Mehta, and friends. Friends, I'll not take much of your time. I already taken some time yesterday, unnoticed and without agenda. Hope you had a fruitful 4 session yesterday to bring to your home the concept how to read FEMA and how to understand FEMA. As I mentioned, there was a little overlapping, but it was intended overlapping. And you know that the individual transactions are now regulated by Reserve Bank of India, and those transactions are those which are mentioned in capital account transaction for residents Indian, and one of the transaction is export of goods and services emanating from section 7 of the FEMA. So this is the first transaction which we will be dealing in a dedicated session on export and import of goods and services. Friends, there are a number of nuances attached and incidental to the export and import of the goods and services. These are like EXIM policy, which is the immediate, then the circulars and the directions of FIDI, then you have various trade bodies which keeps on suggesting the ways and means to facilitate the export and imports. Today, after the first session, you have the session on banking accounts of non-resident. So you would know how to open the bank account, under what circumstances the accounts can be opened, and what are the purposes of the accounts. So that accounts opening by non-residents are also restricted and also regulated in India. Then you have miscellaneous remittances scheme. We are well versed with the miscellaneous remittance scheme. And then you have a specific transaction called immovable properties in India and outside India, both sides. Friends, we could not have a better faculty on export and import management than Ajit Bhai, because more normally consultant chartered accountants are not exposed to the export procedure so much, because most of the time clients, they have their own facilities within the organization. So we thought of a faculty which has a large and in-depth experience of a particular subject, and we have Ajit Bhai, who has to his credit, more than 25-year experience on managing exports, imports and related issues. He has a in-depth, day-to-day, nitty-gritty experience on the subject. He's a commerce graduate, a lawyer, and undergone a formal training under the subject of export and import management. To his credit, he has been a faculty with various organizations like trade bodies, the academic institutions, and he is also instrumental in imparting trainings to the various corporates, domestic as well as international and multinationals. To name few, he has been faculty in an academic organization like Narsi Monji Institute of Management, the Federation of Export Organization, the Bombay Chamber of Commerce, etc. And he has been also in-house trainer for multinational like Hindustan Liver, Gujarat Ambuja Cement, and etc., and to name a few. Last but not the least, he is the recipient of Excellency Award from the SME Chamber of India by the hand of Deputy Governor, Reserve Bank of India. And he's my very close friend for last many years. With these few words, and before I present Ajit Bhai for you, may I request Parimal Bhai to present a memento as a mark of our love and respect to Ajit Bhai. Ajit Bhai, mic is yours. Sorry, I forgot to mention that Ajit Bhai has devised his presentation in a case study format, in a format where how the transaction is to be carried out. So there is very little room or no room for question answers during the session, so that you are there is no break in the flow. That's why if we put a question, if there is a time permit, but you won't need any question because he himself will raise question because of his experience of last 25 years.
Good morning, Paresh Bhai and friends. Let me start with a Chinese proverb. Light and angel needs no introduction. Exactly in the same way, if you are a successful exporter, if you are a successful consultant, tax practitioners, I think you will definitely have a client who is handling either export or import. 64 years of our independence, 13 prime minister and 37 political parties. In spite of all these varieties, one thing which is very common in our country is export should be promoted. This is a standard agenda of the government very from the day one. We got independent in 1947, today we have reached to AK-47 is a different issue, but throughout our policy was all the time to promote the exports. When Paresh Bhai has given me an invitation, my first question which came in my mind is that you are much better knowledgeable in the FEMA rather than me because you are daily practicing it. So I think what am I going to speak to you? Neil Armstrong, when he came to Taj Hotel after his achievement, the first sentence what he has used, I'm repeating it. Neil Armstrong said, with all due respect, I'm very consciously clear that audience knows more than me on this subject. I'm also equally on the same footing. My slightly presentation is in a different way, which my commitment on the dais is very clear that I should do the value addition to you. Each one of you are going to give me 90 minutes. And for 130 participants, 90 minutes is a big commitment from my side. What I have done it. And how you will enjoy my presentation is that you see that you are not a consultant for a time being. Assume that you are not a tax consultant. Assume that you are an exporter. You want to go for an exports. Then how will you take it forward? The first thing, the moment the export comes, you think, let's say for example, you go to Thomas Cook. Or you go to the Cox and Kings and say, this vacation I want to go to Europe. The lady will ask you a first question. Do you have your passport? And if you say no, she will not have any more interest. We exactly do the same. Anyone who approaches us, sir, we wanted some guidance about the exports. My first question, my office will ask first question, do you have an IC code? And the moment that person says no, what is our interpretation as a consultant? That is toying an idea to go for export. He is not. So first we say go and take the IC code. Let's assume that somebody approaches to you as a professional, as a consultant, and you direct him to go to take the IC code. Exactly that's the time where the FEMA, where RBI, the bank comes into picture. ANF2A is a standard form in which there is a D, that's a declaration that you have to do the application. Trust me, 90% people are not in a position to understand the column 5 of the declaration D, including DGFT officers also. I'm a trainer for the DGFT officers. What it says? It says that the applicant, that is the person who wants to go for the IC, whether there is a NRI interest in is there or not. Let's say two brothers who are typically Indian, they wanted to start a firm, then they will tick mark the 5A that we do not have a NRI interest, and the application will be processed very smoothly. Then there is a B, which says that if there is a NRI interest or an investment, then further question, is it on a repatriation basis? If your answer is no, it's not a non-repatriation basis, then the RBI again come into picture. There is a provision which is given over that, general permission. You just quote the general permission number and date, your application will be processed. The third where it will be stuck up. Overall, out of 100 applications, only 4 or 5 applications falls into this category. In your case, if your client happens to fall into that, more particularly when there is a multinational companies or a company where the foreign or an NRI interest or the investment is there, then third one it says that in case there is a non-residence interest or the investment, then you require a special permission, and that special permission from the RBI need to be quoted along with the date, along with the number, and the copy thereof is to be worked out with this. So this is the first way where it works out to. Procedure today is very simple. So you have made the application, you get the application, your IC number is there. IC number is your certificate, it's your starting point, and it is a first and must to start with the exports. Let's say that you got it on the 10th day. What is the next? You have to go for a EDI registration. That is with the customs. Understand, two different authorities. First one was the DGFT, second is the other one is a customs. You go to the customs, there is a registration required, that is called EDI, Electronic Data Interchange. There again, you require one letter from your bank confirming their authorized dealer number, AD code number, and that number is a first requirement for all the EDI port where these particular things are going on. Let me explain to you what is that EDI port. Because these are the things which is going to bother you when you will read this book. Politics apart, we must appreciate what respected Rajiv Gandhi has done for this country. Two things which this generation, the coming generation will all the time remember for Rajiv Gandhi is, the one is he got Sampitrodai to India, so telephone, and second, computerization. The moment the computerization was introduced and it was taken as a part of this, the government was the first one to do it, and custom was much ahead as compared to the other department. DGFT was the first. Now you can understand the Herculean task to make all this computerization of the total system, and more particularly it is ongoing basis. When the everyday shipment has to go, we all understand how difficult it is to get our house repaired or renovated when you are staying inside. It's exactly the same situation. So what they did, they have started doing a phase wise. Delhi was the first, in that again export, in that amount. So they have divided into segments and they have done it. Slowly it has spread. To the best of my knowledge today, about 87-88% port activities are EDI. There is a non-EDI, those which are not. I'll just give you an example. Today also, I understand that perishable goods exports from airports, air cargo complex, is still today non-EDI. Section 74 is still today non-EDI. Export of diamond through BKC, it is still manual shipping bill. So what you need to understand as a consultant, that all your clients' shipments are broadly divided into two parts. First is EDI port, where the documents is a different, slightly there is a variation in the procedure, the name and the nature of the documents are different. If the same activity, there is an export, but if it is on a EDI, non-EDI, that is manual, that is old one, then the documentations are different. So this clear distinction should be well registered in your mind. That's how basically it works. To continue what I was mentioning to you, that suppose this IC is received and today you wanted to export your first shipment. Your client comes and says, this is my document, this is why I wanted to do my first shipment. The moment you want to do a first shipment, please remember, for the first shipment, you require EDI registration, because today I will say most of the thing you go that it is a EDI based. So how to do that? Again, there's a laid down procedure. There again the bank come into picture that you require one letter. There's a standard format, and that is what you have to go with. So that is how basically you work it out with this EDI port. Since we are on EDI port, let me explain to you. With the exporters, you have to file the declarations. Earlier it was a GR, that's a guaranteed remittance. As an exporter, you have a statutory obligation to bring the foreign exchange from the overseas for the goods what you have exported. Let me give you an example. You are the exporter. You have exported one machine of 10 lakhs of rupees to a buyer in Canada. Canadian buyer received that. He does not make a payment to you. So what is your loss to you? Obviously the monetary loss. What is your loss to the government? What is your loss to the nation? That is what we need to understand beyond this. I will explain to you this. Forget about it is a machine. Its weight is a 1 ton. Count this 1 ton as a steel. The day you have exported, before that, the steel reserve in our country, steel availability was X. Now it is X minus 1 ton. So country becomes poor to the extent of this. And therefore the government wanted whatever the material, whatever the resources, whatever the things are going out, corresponding foreign. What happened to Nigeria? People exported. They never bothered to bring them. And we can see that financial condition, what it has happened. That is why it is very, very important that you go for this kind of a declaration. And that is the reason that exporters, you export it, but you have to bring the foreign exchange to our country. That is a statutory. Two things for export-import point of view for FEMA. In 2 lines, if you want to understand, every export must be realized and every import must be paid. This is a summary. Then you can go to the rules and regulations part of it. So you have taken that IC application is there, you have got even registration done. That means you are ready with on a paper. Now what will I do as an exporter? I will search for the market. That's my main core activities. Fortunately, the entire book on FEMA, the government supports, the RBI guidelines, is immune to the countries. It's more or less what is applicable to USA is applicable to Germany, it's applicable to Africa. There are certain places where you will find Nepal and Bhutan exception. Say for example, yesterday I was doing a program for SME Chamber of Commerce. There I mentioned to this. This is again clarity required with you so that you comfortably talk with your customer. That is the objective of mine. You are not going to do export, that I am very clear about it. Please remember, our trade with Nepal is not coming into the exports. That means our trade with the exports with the Nepal will be in the Indian rupees. There is a one exception, that in case the bank over there, like we have in RBI, they have got a Rashtriya Bank. If the Rashtriya Bank permits the Nepalese importer to allow the import into the foreign currency, then that will be treated as part of the exports. Otherwise, no export incentive will be given. Yes, in the last year, March, there was a one notification which has come, in which case the excise part of was is now been regularized, and now it is put for the excise portion only, excise procedure at par with this part of it. This is about this. Same thing, if you remember, with Russia, we have certain trade rupee balance also, which we are working on that. There is a one provision, that if you are doing a business with this, then there is a one restrictions is that you cannot give the agency commission. Otherwise, everywhere you can give the agency commission as per your requirement. But if you are doing under the rupee trade, then again in that there is just one proviso that, however, if the export product is a tobacco, then and a tea, then up to 10% you can give the commission. Barring this, yes, you can go ahead with any country of your choice, the way you require to do the business part of it. So you have taken the IC code number, you have selected the country of your choice. Question comes, I want to now select the product. Again, this entire book, entire rule, entire guideline is immune to the products. That means if you are doing a garment, I am doing a chemical, you are doing engineering items, the rule, the applicability, the guideline is identically same. There is one exception. That is diamond. Please remember, statistically, gems and jewelry is the highest exports of India. Product specific, government is not in favor of it. Let me take the other round, foreign trade policy, which is a Bible for us. There also, for years together, Before 1991-92, there were so many chapters and provisions and the paragraph which was the product specific. But then what happened in India, we know the very simple rule, crying baby get more milk. So one particular industry gets a benefit, the people take that as a base, and the other industries people do the representation, and we all know that nothing happens. They say that if we are satisfied, and we know what the satisfied means. Then slowly a decision was taken that entire book, entire policy will be immune to the products, it will be the generic one. But in those days also, like today also, in our foreign trade policy also, there is a separate proviso. There is a separate earmarked proviso for the diamonds and for the gems and jewelry. Like I'll just give a simple example. Chapter 4, which deals with the import of a duty-free item. That is chapter 4. Duty-free item of an input any product. Here what they have done is 4A they have created, it's only for diamonds, gems and jewelry. So apart from that, all the products are this part of it. So let us say that you already got the product identified. Then question comes about actual marketing. You have to identify the products. There are 6 well-known methods of identifying the buyers. Friends and relatives, correspondence, travel abroad, exhibitions, advertisements, delegations, like these are the things. Let's talk the one which is the most powerful, that is travel abroad. Today no business is possible in this country, without you going and meeting the buyer. I started my career as a marketing person. I was traveling heavily 4.5 months. When I stopped about 12 years before, it was my 14th passport. I remember Mr. Sheikh in Amar building. I was regularly going there for taking my permit, ad hoc permit. Every time we have to go. And the exchange was released was so meager, so less. At times I know how we have managed it. My son today travels. He doesn't have any problem. Enough of the foreign exchange is now being released to you. If you are going for a trade visit, for a training, for a conference, $25,000 are given to you, irrespective of number of days you are going to stay over there. This is a positive thing which is contributed, which is going to help you as an exporters to you. Out of second one, which the government has identified, not only Indian government, many governments has done, like JETRO has done, Kotra has done, Korea has done, Thailand has also done. Our government has followed that, but we are little late. What is that? Very, very interesting and value addition to you. Exhibitions. What government wanted? Government wanted to give certain money to the exporters because that is common interest. But they also wanted to say it should not be misused. Earlier it was there for a study abroad, and people have not studied. They have only taken money. They went to abroad for a family picnic and taken the money over by claiming it. So government wanted to be very, very clear. Please note, there is a one scheme which many of you will not be available. You can use this information tomorrow itself in your office. There is a scheme called Marketing Development Assistance, MDA. You can give it to your clients who are into the exports and they will dance with joy. Let me explain to you. IS officer Mr. Mangal Singh is the one who wrote this scheme. When he was writing, I was in his cabin. I'll explain to you what that scheme is that. Exporter needs to promote. Competition is there. Remember one thing, nobody is going to give you the order because you want to export it. Orders never gets generated on mercy. It is always on merit. You have to do the marketing. What the government has done. MDA scheme they have introduced, and they have given this scheme to the Export Promotion Council to do it. And the base out of all these 6 techniques which I mentioned, exhibition. So what you need to do is that, go to that exhibitions. When you want to participate in the exhibitions, there are 2 things. One is a cost of the stall, second is a travel. And the government gives a subsidies, concession in both the cases. In case of stall, rental charges, booth charges, 80%, 90% up to you can get it. There are various rules and regulations for that. Travel, also you get this same benefit up to 60 to 80%. Now I'll tell you what are the changes which has been affected when this scheme is given. Earlier also this scheme has come in a one or different way, but the scheme was with a tag. Like first, earlier the scheme when it was there, they said that you have to participate in the exhibition through the council only. And it was a misfire. Either the registration was not done, they were not being able to do. Second criteria was when you want to travel abroad, travel only by our national carrier. So that was a difficulty. There are several countries where the Air India was not going at all. Now both things are relaxed. So at any point of time, if you just wanted to know more about you for the benefit of your clients, for your constituents, for your export consultant, export company, ITPO, www.itpo.org, on that you will find abundant information about the exhibitions world over. You should have at least basic knowledge, though you can comfortably talk with your clients. This is the website on which all the world exhibition, product-wise, country-wise, segment-wise, they are available, and it is very updated. They work 2 to 3 years in advance. So you can take the benefits of this. In private segment, there is a company called Orbit. Orbit Travel, Mr. Om Prakash is there. He is the one company who has taken highest number of the delegations overseas, and he is having a tremendous knowledge about the trade exhibitions and this part of it. This is the generic. Let me tell you how the FEMA comes into picture. If, let's say, I have selected eGate of Fashion Fair Germany for garment. Your clients wants to go over there. Please remember, there is a no prior approval of RBI is required to participate, to take the goods over there. Only thing, the declaration and the formalities which you have to follow it up, that you have to see from time to time. Suppose I want to participate in that. 3 names they have used. Exhibition, trade show, expo. It means one and the same. Whether you say Alexander or Sikandar, it makes no difference. Don't get confused. There is a technical difference, but for all these purpose, for FEMA purpose, it means one and the same thing. So A, you can take the goods along with you. You can take the goods through your CHA, this clearing agents also there is there. Now, there is no restrictions on the value. There is no restrictions on how you can take it up. Only thing, whatever you take, declare it. Now, exhibitions are of 2 types. Those of you who have participated or visited the international exhibition, some of the exhibitions are only for display, where the sales are not allowed. And there are exhibitions where sales are either allowed on all days or on the last date. You know, there is a mechanism. In any of the case, see the beautiful provision, support what we get from the FEMA. They say that you are allowed to sell the goods during the exhibition. Suppose the exhibition is over. They say further, after the exhibition also, in the country in which the exhibition was there, or in any other country. That means the earlier, which was a very, very restrictions, that has been gone away. But one care. People make a mistake over here. That is, when you have taken the goods in the eGate of Fashion Fair, that is in Germany, when your goods have left from India, it is export for you, but it's an import for Germany. You are supposed to pay the duty over there. There you have to remember one word, ATA Carnet. This is a global treaty. So Germany will treat this as a temporary import and will not charge the duty. With a clear understanding that after the exhibition is over, within 30 days, the goods should move out of the country. But what happened? You have taken, let us say, 1,000 garment, 300 garment, you have sold in that country. Please remember, you have a responsibility to pay the import duty of that country or the local tax, whatever is applicable. These people are making a mistakes and they are caught at the airport. So be very careful about this. This ATA Carnet is a scheme under which you have to work it out, this part of it. Now, one more provision they have given, which is worth appreciating. I'm in the exhibition. I have got a booth number 23. I have started selling it out. Some good person came, some agent, some prospective customers. I do not want to sell the goods to him. I just wanted to give a gift to him officially. Can I do it? Yes. There is a provision right down. $5,000, up to $5,000 per exhibition, you can gift this part of it. That is also allowed. See the understanding of the drafter of the FEMA. I have taken the goods. At that time, I have to declare the value. Say for t-shirt, I have declared the value as a $10. Because that is generally $10. But when I am taking into the display for the exhibitions, on the last day, I want to get rid of it. So instead of $10, I wanted to reduce it out and sell it at a lower price. Because then the sale is possible. Allowed. No question asked. Not only this much reduction. They say you can reduce it. So even I can sell it at $1. But 2 conditions. I have to give the accounts. I have to give the, and all the amount whatever I sold during the exhibition, I must bring and put it over here in the my accounts. I need to realize the amount and repatriate to India. These two conditions are there. Second, suppose after doing all these things, certain goods, certain products are left out, which is going to come into India. Moment the import come, the document is called bill of entry. Don't mix it up with a bill of lading. Bill of lading is a transport document. This clarity you establish, then you will enjoy it. Bills of lading is a transport document, like airway bill. Bills of entry is a custom document, which when it comes, you file it in this. This is a government document, government authenticate document, which says that what is coming back to India. Time limit is 30 days after the goods arrived. You have to file a bill of entry to this particular bank, and that's how it works out to this. Is this clear? Now, I have come back from the exhibitions and I'm very comfortable. Good response. I have to send the samples. The question is what the FEMA supports me for giving a trade samples. They say that, very important. We all must have seen the physician samples. On that there's a marking that samples not for the sale or physician samples, right? If your product has got a marking on that, non-removable, then excellent provision. There is no limit how much you can send it. Pharmaceutical industry, this is a big, big gift. Earlier, we had a tremendous problem. We used to send it, the samples in a different way, unofficial way. Now there is no need for that. That if you require, if you want, you can keep on doing it, provided it is marked permanently. That's very important. A small sticker will not do, people can remove it out. So that's one. Let us say that you are not marked it. Then also you are allowed. And see the beauty of it. You are allowed up to 10,000 US dollar per shipment. That means you can do as many shipment as consignment you require. So effectively speaking, both the things are permissible. But there is a one care. If your sample, your product happens to be restricted item for exports, then you require DGFT license for that. This is very, very important. Let me take back to what is a restricted items. As I mentioned in the beginning, export is to be promoted. Various products are to be encouraged for exports. But the government has put a small list whereby that is called negative list of exports. Those products cannot be exported, which has got 3 parts of this. Negative list A, which is a prohibited item. You cannot export it under any circumstances. Like ivory, cannot export it. It's a prohibited items. Second is a restricted item. You require an export license, then you can do. Once upon a time, the cotton and the cotton yarn was falling into that. And third one is, that is a STE, that is a canalized item, what the popularly it is known as. That export can only be done by them, like onion. Once upon a time, onion can be exported only by NAFED, not by anybody other agencies. So you have to be careful that if the item what you are sending, even as a sample, but if it is in the restricted items, then you require the proper license. That license is issued by the Udyog Bhavan, that is the headquarter of the DGFT. You have sent the samples. Samples are approved. You have to sign a contract, or you have to give at that time, you require to have a basic knowledge, at least on the Incoterms. There are 11 terms. I'm not going into the detail. This is not a right platform for that. But just understand that there is a, Incoterms is what? International Commercial Terminology. There is a organization called International Chamber of Commerce, popularly called as ICC Paris, and they prepared this booklet, they prepared this volume. At the moment, Incoterm 2010, remember only that much, that is applicable. Other Incoterms are not applicable. It is applicable this one, which you should have at least a fair knowledge. So this is what, whenever you are doing it out, you put in your contract. It's very, very important you don't quote to the overseas party, okay, this ball pen $10. It's an incomplete quotation. It will end up into a problem. This ball pen $10 FOB, C&F, CIF, whatever is that. It should couple with that, otherwise it's incomplete. Now, Your buyer is there, you have sent the samples, buyer approved it, liked it. You have quoted the price accepted. Now the question comes, payment terms. There are 4 payment terms internationally. Advance payment, DP, DA and LC. We take one by one and try to correlate how the FEMA comes into the picture. Lucky enough if you get the advance payment. I'm not too sure whether here there is any charges or not for this. Then that is advance payment. You first pay and then come over here, that's advance. You don't know what the speaker will speak.
You have to spend in advance.
You have to spend in advance. Friends, lucky enough are those exporters who gets the payment in advance. It's always a wishful thinking of it. But really speaking, in a real life, in a ground reality, you always wanted advance payment and buyer does not want to give the advance payment. So it's not a common terms. There are certain, I have identified about 9 different headings. On those circumstances only you can get the advance payment, not otherwise. Let's assume that you are lucky enough you get the advance payment. 2 parts. Either it can be a full advance payment, it can be a part advance payment. Whatever is that. Let's see that today you are sitting in your cabin, your accounts person informs you, sir, we have received $10,000. What exporter is required to do? He has to take a guideline from your FEMA for your banking rules, from PEDI guideline. That he has to apply to the bank for FIRC, Foreign Inward Remittance Certificates. Up to here you know. I'll tell you the technique of it. So you make an application like a simple letter. There is no format of that. Sir, we have received this. You give it to us. You get the FIRC. You get it. You file it up. When you really go for a use, there is a problem. How? I'll explain to you. In FIRC, I'm too sure many of you must have seen it. Just see the last column. Last column, the wording is there. Purpose of remittance. Now, if you read carefully, it says, I'm going a little slow, just pay attention. Purpose of this remittance as declared by the remitter, sender. Now, how it works? Say, for example, $10,000, I got it from Taiwan. My Taiwanese party who has sent to me, when he goes to his bank, give the instructions to send a $10,000. $10,000 will come. In the SWIFT message through which this money is transferred, in that message, there is a proviso, empty they call it. In that they write the message. So they write the message, this is for the payment of a pro forma invoice number so and so. If they do write, it will reflect in mine. But 8 out of 10 times, it so happened that the overseas party sent the money without writing anything. This is the practical difficulties. So what happened? The banker also angutha chap. Whatever is come, they print and give it to you. No, friends, don't take it. You read that very carefully. The last sentence, what it says? Purpose of the remittance as declared by the remitter / receivers. So if they have not given, you have an option. You have to exercise that option at the time of taking that. Once you take it, bank many of the time take a stand, you have not mentioned it. And you will be in trouble. That FIRC will become a tissue paper. So be careful. The provision is very, very clear. It should be a perfect, it should be total, it should be complete FIRC what you have to receive it. You have to give it. Now I'll tell you the practical tip over there which is not written in any of the book. If you try to be very honest, I'm not saying don't be, I'm telling you what difficulties it comes. Suppose this particular buyer has sent to you $10,000 for your export pro forma invoice number 10. So if you are honest, what will you write it? Against advance, against pro forma invoice number 10. You are stuck up. You have to use that payment against that shipment only. But instead if you write the advance against exports orders or export, good enough. You have a flexibility of using it wherever you require it out. So keep that option with you. You may or may not use it. It's very simple. Get dressed and not to go out, or go out and not to get dressed. Very simple. You have to choose it. Friends, I do that. We don't mention very specifically. Against export orders, against export pro forma invoice. Don't put the number. You have a flexibility. And if you do not want, you can mention it. Then your hands are tight. Lucky enough if you are, you enjoy the gala party, dance party and then export it. Good enough. No problem. What happens if you could not export it? I have a client at Bombay Central, very big builders. They are also into exports. They have a counterpart in Dubai. And many of the time, these are again another practical difficulties which your exporter client will tell you. What happened? The overseas party keep on sending it on a lot, 10,000, 20,000, 10,000, 20,000, without correlating it. This happened also with us. Good enough. They see the overall, that okay, 2 lakh rupiya lena hai, $2 lakh aa gaya, but that's all. Mota mota. Here, we are greater than great. We also export it. While exporting, the clerk who is export document, when it goes to a bank, he open the drawer, he open the file, anyone which is FIRC come, he takes and do it out. Good enough. It's your practical convenience. This is a practical problem. What happened in our case? We did it. And whatever that you take it, the bank, and you know, provided it's a generic in the description. They debit it, they minus it out. I do a lot of audit for the Exim company. So we went over there. There were a couple of FIRC left out. Please remember your obligation. As exporter, you have to ship the goods within a period of 12 months from the date of receipt of it. If you don't do it, then you are violating the provision which is given it to you. So your limitations is that you have to do. Now in our case, what happened? Suppose 12 months are over. At the moment, I am handling about 2 to 3 cases of their live. Very interesting cases there. I'll continue with the same, which is a Bombay Central party. 12 months were over. What are the options available to you? A, you want to refund that. That's very normal, that whatever the reason, you cannot refund that part of it. You have to require, you have to take RBI permission for return of this after the period of 12 months. That's one very clear, is that. How to obtain the permission? You should be very, very clear, which I'm too sure you are, that RBI is a banker's bank. As an individual exporter cannot go directly over there. Everything is to be returned through the bank, and the bank will go to regional office, and that's how basically it takes place. We have to use this FIRC within the period of 12 months. There's one more good provision which is there. Suppose the interest is required, then labor rate plus 100, you can do it out with this, provided the provision is there, there's an underlying contract, and based on that, it can be workable in this part of it. Well, let's see positive side. You are the holder of a FIRC, you manufacture the goods, and you want to ship the goods. Several overseas party, when I travel, when I meet, you know, they complain, they criticize. India mein paperwork bahut hai. And we also copy that criticism. We within ourselves also say, "Arey, bahut paperwork hai." Yes, I agree that there is additional paperwork with the online things which is going on. But remember, when we live in the Rome, live like a Roman. There's no point of crying it out. We have to understand the documentation. Documentation is equally important, I will say very, very important for the exporters. My 2 children are not a proof that I am married. I have to give marriage certificate wherever they demand it. Very simple. It's a document-oriented activities. Yesterday, full day program I had done on that. I'm only taking from that the RBI angle. Please remember, at the time of exports, you have to submit what is called GR form, as I told earlier. Now, this GR name is changed and it has become Exchange Declaration Form, that is a EDF form. There is another form which is called SDF form. There is some confusion. Let me try to establish a clarity. Ports, where your export is going, which is online. Right, there you require SDF, Statutory Declaration Form. I repeat, EDI port, if your export is taking place from the EDI port, it's a EDI enabled activity of exporting, you need SDF form, Statutory Declaration Form, and if it is a non-EDI, where there is a manual, old one, you require the GR, which is now known as an Exchange Declaration Form. Are you clear with that? So, they both are mutually exclusive. Whenever you are exporting, either you need a SDF or you need GR. Now it is a Exchange Declaration Form. So, it can't be both. They are mutually exclusive. You can't be married and intelligent. Either of these. Okay, well, now how it is to be done. We take any one of the form because more or less the methodology is the same. So let me take with the GR form or exchange declaration form, this part of it. I will just show you flow, so you will register it well. When tomorrow you are sitting in front of the exporter, you will be perceived that you know about it. What you know is not important. What you project that you know is more important in consultancy. Okay, so let's see, for example. Exporter will prepare his document. He has to prepare this exchange control form, declaration form in a 2 copies, duplicate. Okay. He has to give it to person called clearing agent, new name. Clearing agent is now not called as a clearing agent. Remember this, if you know and your client doesn't know, you will be a one-up. Now clearing agent are not known as a clearing agent, they are known as a custom broker. Okay, change your terminology whenever you are using it. Say them custom broker, it is nothing but a old what we were saying CHA, whether you say festival or carnival, it makes no difference, but say carnival. Okay. So documents will be prepared. These 2 exchange declaration form will be given it to your custom broker who will go to the customs. He will submit it to the customs. Now please remember, when I say custom, it is a building where the officer is sitting on the 3rd floor under the ceiling fan in the chair. Because 90% time when I describe custom, half the people understand a big ground with the ocean behind it where the steamers are moving. That's a port. That's a dock. So have the clarity in your mind. I'm talking about a back office. I'm talking about the office. I'm talking admin office. I'm talking an office where the documents are being processed. Let us say Mrs. Sawant is the officer. The document will be presented to her. Along with a very important document is a shipping bill. Most important is a shipping bill. 2 things we have been taught wrong in 7th standard by our geography teacher. What are the 2 things? Island, Iceland, there's no ice. Greenland, there's no green. Exactly, the shipping bill is also there. Shipping bill has got nothing to do with the shipping company. This is a very often my favorite question when I do the employment for the corporate clients of a management upper. I ask this simple question, what is shipping bill? And you won't believe, at least 5 to 6 people go wrong. They say shipping bill is a document given by shipping company. No, it's not that. It's a custom document. Well, your client exporters prepare the document, and this 2 copy, that's a exchange declaration form, gives it to the customs. Okay, I'm only describing what the custom officer will do with the declaration form. Okay, what is the job? This you should be very clear as a consultant. What is the job of the custom officer with reference to this? Please remember, the role, the job, the function of the custom officer is to check the valuation. Be very clear. Valuation, not the quality. Valuation of the goods. And there, if you wanted, you can write down section 14 of the Customs Act 1962. Is a very, don't read the Custom Act totally, you will go crazy. Only read section 14. That is the most relevant and direct for you. That is where 80% legal cases are there. Section 14 is good enough for it. I'll give you a little background of that. It's very interesting. From 1962, section 14 was all the time referring to a valuation for import. Because the government had a perception that import people will do ghafla. So there let us do a very strict rule. And there was silent, there was no provision in that on the export valuation. So export valuation was done as a general, as a declaration of a truth. 2007, remember this year, in that this section 14 was amended. And a new new provision has come wherein this particular is included. Now today, export valuation as well as import valuation, both are covered by section 14. Okay, so you are the exporters, you have declared the value. With the job of a custom officer is to see that the value declared by the exporter is according to their confirmation, and that's how basically they work it out with this part of it. Okay, so the custom officer, let's say the positive thing, custom officer found that your valuation is correct, so they will certify it and the goods will be shipped. It will go out of the country per se. Custom part is over. Now that 2 copies of an exchange declaration form or a GR form or SDF form, what you have given it to customs, pay attention, the original will be retained by the customs and it will be forwarded to the RBI. When it comes to RBI will enter into systems and wait. Duplicate copy, second copy, will be given it to your clearing agent, which will come back to your client, your customers. Here the customer, your exporter, has to be alert, otherwise he will land into trouble. He has received it. One big thing, one big mistake what the exporter does it, and these are very psychological. Assume that you have a garment factory. You have got an order for 10,000 shirts. So what will happen? The shirt gets manufactured, you keep on packing it out, you see the cartons occupying your space. So you feel that this cargo jana hai. The day it is removed, psychology, you feel export is over now. It's not over. Goods have gone, yet the formalities are over. Yet to be done. So what happens? Now the documents what you receive, I repeat, duplicate, copy, authenticated value by the customs is received by your client exporters through the clearing agent, custom broker. Are you clear? What he has to do it. Don't file it. I have come across several people, they file it. No. You have to submit it to your banker, to your AD bank, to your bank. You have to submit it, all the document. There is a time limit, 21 days. Within 21, there's a very big history behind the 21 days, but it's not a time at the moment to talk because we have arranged the Olympics in the terrace. So anyhow, so I'm just cutting so 21 days is your time limit which you have to submit it over there. Let's say you're submitted in time, no problem. What the banker will do is that banker will not do anything, they will simply file it. Depend upon your relationship, your methodology with the overseas buyer. Let's say payment is received after 1 month, 2 months, whatever the time period, 12 months is there, it is received. Now what? The bank, the day the payment is received, bank will take out that duplicate copy from the file, they will compare it. You have declared $10,000. You have received $10,000. They will do what? They will do 3 things. Very interesting. This is a technicality. You should have this sharpness. They will do 3 things. First, they will compare it or they will check it. They will sign it. They will certify it. And they will send it. That is, they will forward it. 3 things. Compare it, check it, send it. Technical word, if you wanted to be one up as a consultant. What is the word? Don't use this. This is what I have explained to you. The technical word is that the bank will release the GR. Use this word. If you want to impress your client, work hard on the terminology. Release the GR. Don't go to the bank and ask, sir, mera GR bhej diya. No. Have you released the GR? Moment you use the internal terminology, the banker also will feel, okay, this consultant knows something. This is very important. So they release that. It goes to the bank. RBI, what the RBI will do, the original which they have received it from this, from the customs, this is received from this, they will match. The moment both are one and the same, they will relinquish that particular this and just see how we go back. The liability which you created as an exporter on the date of your shipments, by submitting this, get relinquished today. Otherwise, you will get a love letter from them. This is what is basically the things which is required for this part of it. Are we clear on this? So this is how basically it requires. Now let us see some of the side points based on this. Several exporters. I have one company in Bandra. They are exporting some of the parts, mainly to the shipping companies overseas. He is a captain basically. I just went over there, they called me, and what I have observed is they have not submitted the document to the bank. There are 2 things. Either in 21 days, what is the time that you are not submitted, so you go subsequently, or it may so happen that you have totally not gone. So what is the provision? Very, very important. The FEMA, this guideline master circular says that it is a duty of an exporter to submit it within 21 days. That's good enough. In case it is not done, then please remember the relaxation power is given to the bank. The bank has been given a power that they have to understand it, what exactly the first condition what they require is that, suppose if the payment is already realized, then there's no problem. Only thing is that they will see that the transaction is proper, everything is there, track record, everything, and they do this part of that with them. So this is one. So if it is a 21 days are over, not to worry about it. Make a good, beautiful letter, request it. You have to give the reason why this has happened, why it has been done. 90% we write we were not aware about it, and that's good enough that you can regularize this part of it. So this is about the non-submission of document within 21 days. This is very, very important, and this is happening on and off by many, many exporters. Now, what the bank does, the document which you give it to them, what do they do it? The guideline is very, very clear, which is given in the master circular addressed to the banker. They say that RBI has very, very clearly given a guideline to the bank that the moment you receive the documents, don't sleep on that. You have an obligation to send it immediately, quickly, with the greatest possible efficiency to overseas, just pay attention, to overseas importers bank or your correspondent bank. Option is given to them. Okay, they can do it. Now, this is very common. Now, the irregularities which comes. A, exporter approaches the bank and say that instead of sending it to that bank, you send it to my party directly. What they wanted to do, they wanted to save the bank charges. They wanted the speed to increases. Yes, it can be done, provided there are certain criteria. A bank should be satisfied, KYC norms should be followed it up, and they can do it. So that's one part of it. If you are a status holder, that is, if the exporter is a status holder, which is a one category given in chapter 3.10, in that this privilege is given to the exporter that if you are a status holder, you can send the document directly to the party. There are two reasons for, or there are two benefits of this. One is you save the time. Second, you save the cost. Efficiency keeps on going on. That's how basically you can work it out with this part of it. So this is how basically it works out to this part of it. Third, if you are having the LC, letter of credit, for letter of credit, whenever the reference comes, please remember one document, UCP 600. This is a Bible. It has got the paragraph, it has got the clauses. UCP 600 is a Bible for any time which is on the LC is concerned. So at any point of time when the LC is there, do not refer your query reply, your opinion without referring to UCP 600. That's my personal advice to you. Keep this is only 7 or 8 pages book. Just keep it signed by, only read when there is a need. But all your opinion should be, I'll give you a simple example. Very interesting it is, which has got a reflection even in FEMA. We all know when you export it, you get a bills of lading, which is a shipping company's document. What is a document? It's a title to the goods. It's a railway receipt, LR. It's a similar to transport document. Now, this is a common which we all know it. But then there is a forwarded cargo receipt is also there. That means there is a one in-between person to whom this original airway bill is, or a BL is issued, and he issues his own BL, which is called master BL and the home BL. Now the question is whether house BL can be accepted or not. It is already given over there in UCP 600. It is given in our FEMA guideline also. It says very clearly that if it is a LC transaction, and in the LC specifically if it is mentioned that forwarder's cargo receipt can be accepted as a substitute in lieu of the BL, then only it can be accepted. That means otherwise it is not there. Suppose it's a non-LC transaction, then the contract, in that underlying contract, this clause should be very, very clear that BL or CFR will be accepted, then only accepted. In other words, if these two things are not that, then it's not a good document. It should not be considered this part of it. Is it clear? So, documentation, as I mentioned to you, is very, very important part of this. This goods what you have exported, received by the party has seen that okay, it's good enough, he sends the money within the time limit you have imported. Let's see the deviated cases. received it. They say 95 are good, 5 are not good. Bad. So what do? You say, okay, fine, admit it if you can. And if you want to, then the question is, okay, let's talk. What shall we want? He says, I want a reduction in the price. Do it. Allow. Up to 25%. You can go for a reduction of this. Of course, you have to give the document that what is the complaint and all. So you can have that much reduction upfront. If the payment is received, you can remit that amount also. Or if the payment is yet to come, you can reduce it out to that action. You don't need an RBI permission for that. Let's see second situation. He says 5 machines are not working. I want to return the goods to you. Good enough. You say, okay, it's worth bringing it goods over. In one of my clients' case, it has happened like that. We wanted to get it returned because we want to examine where we have gone wrong. So we have done it, the re-import of this. Now, typical situation. It's a tug of war kind of thing. 100 machines you have exported. 5 machines have a defect. There is a complaint. You have admitted complaint. You want to accommodate your buy. These are the all conditions. Now what you are saying to the party, okay, 5 machines bad, send me back. What he says, pay my money back. So now the question, who will do first? See, by this time, since the product has got defect, lot of bad things has happened. You know, now you are not in the same good tuning. So you will say that first you send me the machine, I'll send you the money back. They say, no, first you give me the money back, then only I'll send it. In any case, you are ready, but the question is, who will put a trust on whom? Or who will start first? So you go to your bank, you show them the provision. The bank also will use the same language. पहले माल लेके आओ, फिर लेके जाओ पैसा. No problem. But you say, no, this party is saying this other way around. Please remember the enabling provision. It's in your favor. Even if the goods have not received, but he has agreed to give it, agreed only. Right? You can still remit that amount. But you have to give an undertaking. And once that is there, within 3 months, you have to bring the goods. That is your obligation. Understand your obligation, understand your rights. And that's how basically you can work it out with this part of it. You can do this part of it. As I told you that there's a time limit which is given for a different categories of the exporters, time limit within which we have to do. Overall, we can say 12 months. Let's see the one more example. You are the exporter. You have exported the goods regularly. Today is a 12 month over. You have not received either a full amount or a part amount. 80% आ गया, 20% नहीं आया. What you have to do? You have to approach your bank for an extension of the time. You have to just explain to them 2 to 3 things you have to say. A, documents you have to go. Please remember, you must have routed your document through that. That's one. B, if you give it to them, give a declaration that yes, in the extension time, we will be able to bring it. All those things, once you give it, the bank is allowed. Bank will generally grant half the time. It's nowhere mentioned. I'm saying from the experience. Half the time than the time which is originally allowed. So they will give you 6 months. Within that, you have to bring it over there. Now let's see further. Today, that 18th month, that is a plus 12 plus 6, 18th month is over. You have got part further, but not fully. So what is the situation? Please remember, whatever good relation, bank has no power. Now the matter will be referred to Reserve Bank for that. Reserve Bank will stipulate their conditions and they will give the time. That's how basically you have to work it out with this. Different situation altogether. You are the exporter. You have a buyer. $10,000 you have to take from the buyer. You are making all these efforts to get this thing, work it out with this. You have taken the extension. Now the situation is such that you know, your gut feel says, अंतरात्मा की आवाज आपकी करे, ये आदमी पैसा नहीं देने वाला है. There are 2 things you have to remember at the back of your mind when you get the payment or when you don't get the payment. There are 2 factors which influences on the payment. One is ability to pay and second is a willingness to pay. Both things should coexist. Then only the payment will forthcome, not otherwise. Let's see a situation where you have reached to a situation, you have reached to a stage where at that point of time you have written off by yourselves. Then can you write off on your own? Yes, there are 3 things what you have to remember. Very, very interesting. Many people are not aware about it. What the provision says, what the FEMA provision says. A, remember stage wise, it will be very easy for you to structure it. 5% of your annual amount outstanding that you can realize during the last year, that you can do it out. Let's say whatever it comes, you can do self write-off. That means, how exactly? Suppose you with your partner, you both are decided, but this party will not give it. Call the accountant, see what is your annual realization of the last calendar year, calculate 5%. If this amount is coming within that self write-off scheme, okay? Then what you don't need to ask RBI. You don't need to ask bank. Just ask your wife, give the instruction to the accountant, write off. You can do it. There's a procedure which you have to follow it. So do on your own. If you are status holder, then this 5% becomes 10%, right? Then further, if you require, then you have to go to the bank. Your bank has got a power of 10%, and thereafter it goes to the RBI. So it is a stage wise what is required to be done. Now in both the cases, when there is a write-off, or rather in all the cases, right, which I was discussing with Paresh bhai over a cup of tea, one sentence which you will often find under every clause, and which is a logic. Appreciate this. Whenever you have to write off or reduce the amount, whatever is that, the clause reads that exporter has got an obligation to return the incentive what you have taken. We all are aware that exporter has got incentives. You have to return, and which is quite logical. If you have not got the foreign exchange, you pay back. That incentive is also on a pro rata basis. So what generally people will do it, they will calculate. I can show you the way where you don't require to repay. So for that, you should have a little knowledge about incentives. There are total 12 different type of the incentives are there. First one, the one which is called duty drawback, which is a Ministry of Finance, handled by Customs. Customs, I am too sure you all must be knowing, the department who gives you cust. That's a custom. Most famous for the harassment, that's a department. Okay, so they give you a duty drawback. Their duty drawback is a system or a scheme whereby the moment you export, even if you don't realize the payment, it is credited. So logically you have to pay it back. Now I'll tell you the situation where you don't need to pay. How? Just pay. This is slightly a fine tuning of it. This duty drawback has got a 3 bases. Ad valorem, according to value, quantity, and a number. 60% items, there are total 6,800 items in the drawback rate schedule, AIR. 60% of the items are value based. That is 10%, like ready-made garment, 6%. You export 100, you get 6. That's what it is. Balance are on weight basis. If I am exporting a brass flower vase, per kg I get 45 rupees. So it's on kg basis and not on value basis. And there are 3 products like a cigarettes, razor blade, and video cassettes. They are on number basis. How many pieces? Like cigarette is a 10,000 cigarettes. Okay, these are the 3 bases. Now let us take one example. Ready-made garment. I have exported ready-made garment for 100 rupees. 6% is a drawback. I have received 80% of this. Obviously, I have to refund that balance 20%, non-realized on a pro rata basis. I have to return the drawback to this. Interesting. You have to pay interest also on that. So it's not interesting, honestly speaking. So you have to pay the duty drawback refund along with the 18% interest thereon from the date your account is credited till the date you give it over there. This is logical and acceptable. Suppose you are exporting a brass flower vase which is on kg basis and your realization has got shortfall. But if there is no restrictions as to the per kg, then since you have received the less amount but your basis of the drawback was on kg basis, you are not required to refund it because that many kgs you have already exported it. Are you getting it? I repeat. Duty drawback are on 3 bases. Value, you have to refund. Weight, you need not require because it is on the linked with your weight, not with the value. So you have exported 1 kg of the brass, then 45 kg what you are getting it, still export of brass still remains there. Realization is, valuation is a different, you need not require to do. I'll give one third interesting example, stainless steel utensils. There it is a value, but there is a value cap. So value cap is 160 rupees per kilo. Your export is 800 rupees a kilo. Your after less realization, it becomes 750. Still it is with the value cap. You need not require to do it. So in other words, you need to do the calculations before you come to the conclusion. Your banker will not understand this, honestly speaking. You have to do the Excel sheet. You have to explain to them. You have to take it understanding, and then that will work. Second aspect, these are one. There are 10 different export promotion scheme which is handled by, which is the Ministry of Commerce, but handled by DGFT, Director General Foreign Trade, what we call licensing authority, what we call regional authorities. Now here, as per the FEMA guideline, they say that you have to obtain a certificate that you have returned the this incentives. I still fail to understand how it is operated, because truly speaking, almost all the incentive today, except that earlier DEPB which was that, today it is post realization. So if I have not realized, there is no room or a scope or a position that I can avail the benefits. So the situation is that the banker will go by the words that what is written. They will say that you go and get a certificate. So you go to the DGFT, you meet the PRO, you meet the FTDO, you meet the concerned officer and explain them a situations. They say that we have not given a benefits to you. So question doesn't arise that you have to surrender to us. I'll tell you practical way out. There is no certification giving methodology practice in the DGFT. What you need to do is that your client will be facing a problem. What you need to do is that, let's say for example, there is an advanced license. I'm not going into the detail. It's one benefit. One shipping bill is there in which there is a shortfall in the realization. What you need to do is that you have to just give that shipping bill later to that, so that later will go into the file, and that particular shipping bill will not be considered for that particular part if the goods are going to be returned, or for that the amount is going to be reduced. So there is no system of that. Somehow you have to give the letter and take an acknowledgement. It will go into the file. Drawback, you have to do it out. Now two more further situation to that. Very interesting it is. You are the exporter. You have a Mr. Matthew as your buyer in USA. When you have exported, you have covered yourself under the ECGC, Export Credit Guarantee Corporation, which is nothing but a credit risk insurance company. Party failed, you have filed a claim, the claim processed, DGFT, this ECGC admitted it. So what they will do? Now they will make the payment to you. Now see the difference. Your obligation under the FEMA, your obligation under the exports is to earn the foreign exchange. ECGC is going to make you payment in rupee. Please remember very, very clearly in FEMA guideline, it is very, very clearly mentioned in this master circular that amount paid by ECGC or the private insurance company approved by the IRDA is not to be construed as a foreign exchange. That's very clear. So it's a clear statement is there. But the very purpose of my taking an ECGC was that. So ECGC will compensate to me to the extent of my goods or the value of the goods. But what about the incentives? Because many of the time, if you see the cost sheet of my incentive is a factorization, which I have done it. So I'm not properly compensated in that particular case. There is a provision which is available in the foreign trade policy, which says very clearly that if, just try to understand this, in case if you have exported the goods, the buyer fails, claim is admitted, not claim is made, claim is admitted by the ECGC and you have been paid, then you need not require to return your incentives to the DGFT. Are you clear with that? Now here there is a one practical problem. SJ International, Lakshmi Industrial Estate, Lower Parel is a client of mine. We have this situation. European buyer, we exported the goods. Party failed, we went into that. 38 lakhs of rupees, we got it from the ECGC. Claim settled. At that point of time, we have claimed a duty drawback and not this. So duty drawback, we have to give a refund. We have refunded it. When the matter was brought to my notice, I said, this is something which is not a proper. If I take the benefit of the DGFT, I don't have to refund. If I take it over there, I have to refund it, and on that product, both are alternatives available to me. Very interesting. Then we took up the matter. Today in the FEMA guideline, it is given that even if the ECGC has made the payment, you have to refund it. I have a notification. I took up the matter with the FIO. I have the copy of the notification. I'll give it to Paresh bhai. Be very clear, that notification very, very clearly say from that date you need not require to pay. So what is given over there needs to be looked into that by your chamber. You can take up the matter. It is very, very clear that now, as on today, we could not we were not successful to give the retrospective effect of that, but we were successful, and there is an enabling notification is there that duty, I repeat, duty drawback also is not required to be refunded if the ECGC payment is done. Are you clear with that? This is a one value addition to you. One more thing. You have exported the goods. Before the goods have reached over there, it has happened to any of the insurable perils, and the goods were destroyed, short limit, whatever it happens. And you have been paid, claim is settled by the insurance company. That also the similar provision will be applicable. But there in that case, the drawback still requires to be paid, because the notification only talks about the ECGC and not for the drawback part of it. Is it clear to this? This is how basically it works. The sixth technique which I said there, the fifth one is an agent. Yes, overseas agent play a very, very important role in marketing or helping it. And they do not belong to Mother Teresa's family. So we have to give them a commission. Traditionally, I am observing that earlier this agency commission was only granted, limit was 3%, 5%, 7.5%. The last was 12.5%. Under this present, it's not mentioned that what percentage it is. So, what is the guideline? Guideline is very, very clear. The commission, what you have declared in your exchange declaration form, that is your entitlement, because that has been taken by the custom officer while doing the valuation part of it. So, based on that, you can remit this. One further, which is a very day-to-day cases which are coming, is that exporter exported the goods, forgot to mention the commission, and later on this commission is required to be remitted. The provision is giving you two options. First, reduction in the receivables. Whatever amount you take, you can reduce it out. 5% commission, 100 rupees to receive. Only receive 95%, you can close your exchange declaration form. Second, you get all 100 and you give it back to 5. Symphony is my client at Ville Parle. Very interesting case. When he came, first time I rejected him. He says, sir, मेरा shipment हो रहा है, मुझे 42%, 40-45% commission देना है. मैं बोला, who is doing business, you or your agent? He says, no, sir, there is a logic behind it. He is basically an artist. He does a lot of paintings over there. So he says that his Canadian agent is required to be given 45%. I said, no bank will allow it, not even custom will allow. He said, no, sir. Then he explained to me that in Canada, he takes the art theater, he arranged for this display, he arranged for the lights, he stay there for a day. He says, sir, and mine is a product where only thing I have to change the value. It has no cost. So if that I add it up and then I do it out. I said, it's a little difficult, but let us do it out. And we got it approved. So the question is, you have to justify the justification of whatever the commission you are giving it, whether that commission is worth or that commission is a right commission or not. Now this 12.5% cap has gone out of this. Right? So you have to justify, depend upon a trade and trade practice. That's how basically you need to work it out with this part of it. Well, let's talk something about the import. Exactly opposite to that, two aspects of import. Goods coming into the country, foreign exchange going out of the country. Your client, your importer client, when he makes a payment, let us say the first, when the bank come into the picture, that is at the time of opening a letter of credit. Bank is guided by the UCP 600 as I mentioned. We see one typical situation. Your client wanted to import air condition with the RO gas inside. Please remember, it is a negative list item. So for import, the bank will not open the LC unless you are holding the SIL, that is a specific import license, which is issued by the DGFT Udyog Bhavan. So then only you will be able to do this. Now, you got the license, you go to the bank. Bank opens a license, debit the license. License, there are 2 copies. This is the only typical thing in India. Very interesting. What is an import? In India, import means different thing. In Nigeria, import means different thing. I'll explain to you. This is interesting for you to know. You are the importer, you approach the government, you ask for a license, government gives you a license. Okay. What it means? $10,000 import of 10 or 100 air conditioned machine. The moment this license is given to you, it is in 2 copies. One is a custom purpose copy, second is a exchange control copy. Very interesting it is. Huh? Custom purpose copy refers to goods that, okay, 100 machines are allowed for you to be imported. Exchange control copy means that this much foreign exchange will be allowed to be remitted. You don't need a separate permit. In Nigeria, many exporters are getting stuck over here. In Nigeria also, for items which are restricted list, they have to apply, that is called a M form. Very interesting it is. It will be a tremendous value addition to you. You are the exporter, your buyer is in Nigeria. And you know this item requires a restrictions. It is a restriction. He has to apply for the M form. What he will do, what many Nigerian importers are cheating or doing a problem with you. The moment they apply the license, they get the M form, which is nothing but a license. So they send a license in your name with your product. What you feel that now he can import it. No, he cannot import it. Because the government of Nigeria has given a permission to import the goods. They have not yet given him a foreign exchange. So exchange is a problem in that country. So how it works, every Friday, the banks is auctioning the exchange. And the moment you get the exchange, then that exchange and this M form put together will allow the import. In India, it is exactly the opposite. Beautiful thing in India we are doing. The moment the exchange, this license is signed, it is signed both the copies. That means permission to import the goods and allocation of the foreign exchange simultaneously up to that value. That means we don't require a separate permit. There is no procedure to go for this particular part. Exception is a CCP where you don't have to remit the fund. So this is how basically it works out to. Your import clients wanted to import 100 machines, air conditioned with the RO, which is a restricted item. They go to the bank, bank opens LC. Material arrives. Import procedure is to be followed up. The moment the material became custom will clear, duty is paid, it is got into this. There will be a document of bill of entry. He has to file the bill of entry to this within 90 days, 3 months from the date of remittance. Remittance will be allowed under by A1 form. That's a normal procedure. I'll take you a deviation. 100 machine which has come to your factory, you have found that 10 machines are not there. It's only counted as 90 machines. Your bill of entry, invoice, everything was 100. So what you do, you telephone to your supplier and said, sir, this is a problem, there is a short shipments. Only 90 is there. He checks up, he says, oh yes, 2 cartons are left out here, 10 machines are left out over here. This happens. So what happened? He says, okay, I will send it to you. Can you do it? No. See the problem, I'll tell you. I repeat, you are the importer, 100 machine is that, you have got a LC for 100 machines, documented as 100 machines. License was 100 machines, debited in custom 100 machines. When it comes to your place, even if that party wanted to give you free of charge, the first question is, sir, I will have to pay the duty again. Yes, then you say, okay, don't worry, I'll sell it to you on a DDP basis. That is all expense to my account. Still you cannot do because you don't have a license. So you have to go for further for the license part of it, then only you can do this part of it. Right? I think crossing 1 minute more. 5 minutes. I think 10 is, yeah. Okay, good. Goods exported, found defective, and you want to bring it back, right? It is allowed, but only problem will be that of the duty. So you should be very careful that when the goods exported by you, when it comes back to India, there is a custom notification 94/96. And in that particular case, FEMA also supports you. You do not require to pay the duty only to the extent whenever you are exported, whatever the incentives you have taken, that incentives part is to be taken care of it. Right? So this is only part of this, what we can work it out with this. I think it's 11:05. I think I'll take another 5 minutes. Yes, the bill of entry, what you have to submit it. There is a exemption that if your import per bill of entry, I repeat, if you are importing by bill of entry, the value is 1,100,000 US dollar, you need not require to file the bill of entry with the bank. There is an exemption limit. Above this, what you require to file within that 3 months period. Now, whenever you file that, whenever you submit the bill of entry, exchange control copy to the bank, please take the acknowledgement copy of that. If you don't take it, and if there is a problem at the later stage, I was handling the Wilson pen at Ville Parla, Mr. Bhuta. His case was only exactly because of that, and we had that bank acknowledgement which has saved our client. So guide your clients that any point of time, if they submit the bill of entry to the bank, please prepare the covering letter and obtain the dated acknowledgement. Otherwise, if in the future there is a so-cause notice or any difficulties, then you will have an issue part of it. Okay, let me take the last point. Merchanting trade. Very, very interesting. Merchanting trade and maybe a third-party payment we can take. Software export. I'll take 3 things, right? Software export, merchanting. Okay, I'll take 3 small points. I have to catch one meeting with Tata people, so I'll just finish this. Merchanting trade. All the multinational company, they call it a drop shipment. When for the first time I was doing a seminar and somebody said, sir, can you explain drop shipment? I said, I will prefer like to drop myself. I don't know about that. Then he explained to me the entire part of it. Sir, this is something which is a new. We all know what is export, we all know what is import. This has happened because I feel that people have started traveling abroad heavily. People have started developing a content, internet, all has helped because the knowledge part, it has become a tremendous part of it. Merchanting trade or a drop shipment, certain basics I'll clarify. It is not an export and it is not an import. So you don't find a one word about merchanting trade in foreign trade policy, in the custom manual, in the custom act, nowhere you will find. Only place you will find the detail about the merchanting trade, that is in your master circular on 13 or the FEMA. What exactly it is there? I'll give you the example which I have handled it. There's a company, we placed an order with a Vietnam for a bulb. And that bulb we were to, not this bulb, any bulb. Okay. And they were to be exported to Doha, Qatar. Okay, what exactly we have done? Goods to be manufactured at Vietnam, company in India, and my buyer was in Doha, Qatar. Understand the logic. What they are saying? A, Indian party will not be called exporter, will not be called importer. He will be called merchanting traders. It's a purely a trade. What is required? What is given out over here? The guideline. First, the transaction, that is the import of the bulb and export of the bulb should be permissible. That means it should not be in the restricted list, which is most of the cases will be covered. Now, they say that the entire transaction, very, very technical it is, entire transaction should be completed within a period of 9 months. Now see how it is to be seen. 1. Shipment of the bulb from Vietnam to Doha, one activity. Or advance received from Doha to India, second activity. Or my giving advance to Vietnam, 3 things. physical movement, my receipt over there, or I paid. This is called starting point. Any one of these three things, any one which happens, that date is to be locked as a starting date. Are you clear with that? Second, again, shipment of the goods. Full payment received from the Doha, full payment received over the Vietnam is a second one. So first and second period should be not exceeds more than 9 months. Within that, this has to be done. What the government, when I was reading it, what the government is suspecting, that's very important. Then you will understand it. Throughout they understand that some people will do only manipulation on paper. They will take the finance will be arranged. All those things are there. So there are a lot of restrictions they have put it up. INEX, Vikrant or Vinay, a student of mine, he is doing this very lovely. He is only doing this, merchanting trade. What is the provision over there? Suppose in the same example which I mentioned, suppose from Doha, I have received some amount in advance. This advance you can't freely, luxuriously use it. This amount is specifically for that, so bank says you can't use it. You have to only earmark and keep it for that payment only. Of course, interest bearing small time you can put it up there. But this amount is not a free, because government is suspecting people will use this as a financing aspect of it. So they say very, very clearly. One typical situation, very interesting, business, anything can take place. Let's see this in the same situation. My Vietnam party is stronger than me. So he says that you give me advance payment. Right, I have to send them. And this party is not giving me the money. So what is the situation? Outflow is first. Correct? They have put a restriction. Outflow cannot remain for a more than a 4 months period. So that's how basically we need to work it out with this one. It's very, very interesting. And if your client is traveling heavily, then there is possibility of exploiting, because he will have a context, and contact today pays. Only one thing in the documentation side, not from the FEMA point of view, one thing which you should be very, very clear. Several times, when you do not want both the parties to know each other's name, you have to undergo what we call it a switch BL. And switch BL is not a legal document. So to that extent, this transaction has got a little bit illegality involved into that if you enter into the switch BL procedure. Right? This is the first part of it. Second, which I wanted to do is a third party payment. See, sometimes the perceived value of the government and perceived value of the exporters are different. Very, very practical ground reality, I'll tell you. How the business is being done. Africa, as I told you, the M form of a Nigeria. I'm exporting a goods to X buyer in the overseas. What is my objective? I should get my money. Whether it comes from X or a Y or a Z, there's no issue. And I used to get it. For years together, this was happening. So it has become in certain countries like a trade practice. We have no objection as long as we are getting it. They say, okay, we have a problem in our country for finance. You are getting the money, why you bother about it? So what we used to do it, that the moment the payment comes, you go to the bank, and the bank used to credit and release this one. This was happening. So this has become like a accepted practice by the exporters, mainly with those who are doing with the Ghana, Africa, all those countries. There was one notification. The first line of the notification, when I was reading it, I was laughing at myself. I'm reading the first sentence of that notification. It says that further to liberalize our rules and to facilitate the exporters, now third party payment is permitted. So now what it is? Permitted subject to following. The first is that there should be tri-party agreement should be there. So I am exporting to X, I am getting a payment from Y. So X, Y and me, there should be a tri-party agreement, which is not possible. That's one. Second, that when I am exporting it, I have to file extent declaration. At that time, I have to mention where am I going to get the payment, which is not practical. And third is all basically that bona fides and all those transactions are there. And there is a list of the countries, only the payment should come from these countries. There was a tremendous hue and cry among the exporters. So on 17th January, one clarification circular number 100 was issued, wherein they say the first condition, you remove it out. But it is still that remains that you have to give the declaration, which at the moment is a burning problem among the exporters, mainly to the Africa or those who are making a payment anyway. The payment is coming from London, Singapore and Hong Kong. They are facing this is a present problem with the exporters are facing with this part of it. So compliance, up till now what happened, the bank, I was managing it out because I was taking care during a Christmas. I used to give chocolate and the tie and everything. So he used to take care rest of the period. Now they are giving this circular to me that you comply with the circular, then I can do it. So this is the problem. Last one. Software import. I remember I was sharing a platform with one Mr. Patel of the RBI, Amar building, long back, in the Bombay Chamber of Commerce. In those days, many years before, this service export was very, very new. So I told him, sir, for export of the goods and for import of the goods and all those things, there is a document. What about service tax? He said, sir, don't quote me anywhere. Now I can quote him. He said that हमें कुछ मालूम नहीं है ये सर्विस में कौन सी चीज कहां से जाती है कहां से आती है, हमें कुछ मालूम नहीं, हम कुछ एक चीज आप ध्यान में रखिए, जिस चीज के अंदर बैंक गवर्नमेंट इंटरवीन कम करती है ना वो फ्लरिश होता है, डायमंड, उनको मालूम नहीं वैल्यूएशन कैसे करना, सॉफ्टवेयर उनको मालूम नहीं है, जिसमें इंटरवीन करते टेक्सटाइल कुछ नहीं, आज इंडस्ट्री पूरी खलास हो गई. This is a fact, this is observation. Okay, let me take you with one example how the import of the software, many of us, you must be doing import of a software. Let me tell you to the actual one. You are sitting in your office, you are on the internet, and you have seen some small package, software. Let's say that it is suitable for you. You wanted a say pay package or salary package or how it is to be done. It's only for 25 people. You feel, okay, my staff is 25, 30, it's suitable to you. So what do? You go little bit more into that. You find it's good one. Then next thing you see, what is the cost? 12,000 rupees. Okay, you can afford it. Now what your mind will say, let me do it out. Suppose there's a trial period. वो तो आप immediately कर लोगे. Trial period हो गया. You have imported it or downloaded it. Now see the situation. This is an import. Huh? This is an import. This import, you and the God alone knows that you have imported it because you have done in your own cabin. Now the company who has provided you will send you an invoice. So what you will do, आप आपके accounts वाले को बोलेंगे जाओ payment कर लो बैंक में जाके. तो he will go to the bank to make the payment. बैंक में knowledge नहीं होगा तो वो payment भी कर देगा. But what is the real thing? One important correction in your information, in your knowledge is that there is a one myth which many bankers has told me when I was interacting with them. Sir, import of the software is a duty free. Sir, it is not that. Only IT related. There is a specific category in chapter 84, 85. Those softwares are, there are n number of the software. All software are not there. IT related, specifically listed software are zero duty. Let's say that you have taken a pay package software. What you should do, that I am explaining. I got an article, I'll give it to you. You can print in your this article, I got it. What you have to do is, I'll tell you the step. A, if you are importing physically, that is say CD or a book or a manual, then normal import. That's okay. If you are doing anything on internet, online, downloaded in your system, then moment the invoice come, you have to go and give it to your bank. Show it to the bank, will not allow the remittance to you. So what you have to do, you have to go to the nearest custom at your region. Please remember, no bill of entry is to be filed. Only TR6. You have to calculate the import duty, pay the TR6 on that, take the TR6 and take one certificate from your chartered that yes, it is downloaded. These two things, give it to the bank and then the bank will remit it. So this is a procedure. I have already got a written down. I'll give it to Paresh bhai maybe in your magazine, or you can print it out and you can do it out. So this is how basically it requires to be done. Okay friends, thank you very much.
Friends, you will all agree that the objective of the International Tax Committee and the Chamber to impart knowledge and enable you to make practice of the subject is well met with the lecture of Ajit Bhai. With this, remark, may I request Devendra Bhai to propose a very well-deserved vote of thanks for Ajit Bhai.